Omair, thanks for joining us here again today. Omair, a lot of people are concerned. We're at the eighth consecutive rate hike. We're sitting at 4.5% with the Bank of Canada. What are some of the strategies? What are some of the solutions that you're able to come up with during these times? How are people navigating this mortgage situation right now?
Thanks for having me, Ricky, first and foremost. But you're right. All of the Canadian banks are now at 6.7 prime rates because, like you said, the overnight rate is at 4.5%, which basically means that variable rate mortgages are now even more expensive than fixed rate mortgages. And that also means that the stress test to qualify for variable rate mortgages is now a little bit higher. The lowest variable rate stress test is now at 7.5% because 5.5% would be nationally the lowest variable rate someone could get if they were getting a high ratio insured mortgage. But I guess the good news here is that the markets now expect Bank of Canada to start cutting rates by the end of the year. I believe the traders on the bond market, they're saying by October, we would potentially start seeing rate decreases. And when we see something like that, when markets are anticipating rate cuts further down the line, that's when you start seeing bond yields, they will start to come down. And we've started seeing that already. So bond yields are starting to adjust. They've already gone down by over 60 basis points since the start of the year, which is quite high, which is quite a bit of adjustment in the bond market. So what does that do? Well, it means that 5-year fixed rates, 4-year fixed rate, 3-year fixed rates, they've all come down, right? 3 months ago or 4 months ago, you couldn't get a rate that was below 5%, right? Rates were all 5.4, 5.5, 5.6. And now we're starting to see rates as low as 4.3 on a 5-year fix. Even for a 3-year fix or 4-year fix, we're seeing rates as low as 4.69, which is almost a whole percent point lower than what we were seeing 3 or 4 months ago. Yeah. So we're already seeing rates are going in the right direction. And just like I've been saying in the past as well, we're looking at the curve. The yield curve is inverted. So what that means is that the higher terms, 5-year, 4-year, they're cheaper than lower terms like variable, 1-year, 2-year. Right? That's because the markets anticipate that high rates are not going to stay around for too long. So banks, what they want to do is they want to try to lock you in at this point, but you got to be very careful. You would like to target rates of 2 years or 3-year fixed, and there's some great rates. Even with big banks out there right now, you can get 4.3, 4.4, 4.5, somewhere around there.
Yeah. And before we started all these increases, like people would have looked at those rates and said, that's absurd. I'm going to go with the variable. That's why there was such a high demand for variable products. But in today's market, if you time it, if you plan it, if you've got the right advisor, you can strategically create a plan so that you ride out the current times with the current rates on a fixed mortgage, and then eventually either refinance or whatever it is, renew on a variable term if those rates look appealing, which they should, because theoretically what goes up goes down, what goes down does go up. It's just being able to ride that and having a professional who can walk you through those different ebbs and flows.
100%. And that's the thing, right? Like bond yields are coming down, so we're going to start seeing further lower rates, and we're going to start seeing them in the next few months. So right now, TD being one of the major big financial institutions that have started cutting rates. They're the first ones that are now issuing 3-year mortgages under 5%. So like 4.69, 4.59. Funny thing is, we had a client who went into a bank. I'm not going to say what bank because it doesn't matter. He went into a bank. At the bank, he was being given a rate of a 3-year fixed somewhere around 5.29. That banker turned around and said, hey, I'm telling you, you can get a better rate out there. Why don't you contact these guys at the Six Mortgage Group and talk to them? Client contacted us. We gave him 4.69 on a 3-year fixed with TD. Mm-hmm. And when we were looking at the offer, we realized that the agent is from Remax Metropolis. Yeah, it was. It's unbelievable. That just goes to show, how active you guys are and how active your agents are. So it's very important to understand that we're going to be seeing better rates out there. And from a bank's perspective, you're not going to see banks go in from quarter to quarter to quarter and lose business.
Yeah. And they start competing. You start seeing them compete at the rate level as well. They start undercutting each other.
Exactly. So this is what's going to happen, right? Banks are not going to hemorrhage money. They're not going to hemorrhage money for long. They're not going to continue to look at their forecast and see that they're bringing in less business than they did last quarter, right? They have stakeholders to respond to. They have shareholders to answer to, right? So what you're going to see is that these banks will now start to offer better rates. And absolutely, if you're in the market right now, this is the best time. Because overall, if you think about it, with the price adjustments that already happened, and now that the rates are coming down as well, this is probably the best time for someone to get into the market.
And on that note, Omair, I think it's really important for the listeners to appreciate that you really need to know what you're looking at from a market perspective, because using averages to determine whether the neighborhood you're looking to move into or move out of, you can't run those averages, because right now, as it stands, I can tell you, average speaking, we are very much in a seller's market. And what's crazy to me is that you can talk to 5 different agents. One will say we're in a buyer's market. One will say we're in a balanced market. One will say we're in a seller's market. That's like going to a doctor saying I've got pain in my abdomen. One doctor says it's your heart. One says it's your lungs. One says it's your brain. And in any other industry, people would get sued for bad advice. And so I think now more than ever, it's important to look at what's happening in your micro market. And if you look at most micro markets today, what we're experiencing is both supply and demand are coming down in tandem. And to your point, with the prices bottoming out, leveling out, we've seen that consistently for several months now, where it's starting to just kind of flatline. And it's because there is no supply, or the supply and demand have both come down. And now we're starting to see them go up in tandem week over week. And that's why we're not seeing these crazy ebbs and flows like we did in the beginning when this all started Q1 last year. Things have leveled out to a point where we're actually seeing multiple offers now in many regions again. And people are going in firm. They're connecting with their mortgage agent to make sure that they can get it done. And they're going with these fixed products. We're seeing more and more of that.
Yeah, there's lack of inventory in many markets still. And you're absolutely right. People have to go in with firm offers. If you're doing that, make sure you're properly pre-approved. You know where your financing is, you know what your limit is, because the last thing you want is to sign the dotted line and you don't know exactly what you can qualify for.
Yeah.
But this is what it is, right? I think going into the spring market, we're in a very good position. Inflation numbers, they're going to look better and better and better year after year, month after month. Because one thing that you can understand is that when they calculate the inflation comparables, the bigger numbers, the numbers that were the 8s and 9s, whatever, right? They've already gone out of the system. So when they look at a 3-month look back, right, inflation numbers are going to look better and better and better month over month. So Bank of Canada is keeping an eye on this. This is one of the main reasons that pretty much Tiff McCallum went on record and said, we're going to be holding, we're going to be seeing what happens, and all the bond traders are now expecting later this year we're going to start going into rate cuts. So if you know exactly where this is headed, you can make some really, really good moves, really smart moves that could make you some excellent wealth at this time.
Definitely. Makes a lot of sense. Omair, thank you again for the insights. As always, we'll connect again soon, and bye for now.
Thank you, sir. Take care.